Hey everybody, what's going on? My name's Rantin, and if you're looking at my channel for the first time, welcome to Wrestling with Finance. Now, I am a big pro wrestling fan. I enjoy pro wrestling. I've been watching it for over 30 years. But something else I also enjoy, not as long, but is investing in personal finance, and I've taken a lot of interest in it. And over the next couple of weeks, I will be doing some more videos in here for this new little mini course, I guess you could call it a course, a program called Wrestling with Finance, where I'm taking basically two things that I really like. It's pro wrestling and finance, and merging them together in these videos to kind of talk to you guys about it. Now, I've heard from a lot of people who follow me for pro wrestling. I did one of these videos before. A lot of them said that, hey, I'd like to know a little bit more about personal finance. I asked people if they'd like to hear about that on this channel. So I'm going to be doing more of these videos. And of course, if you are a person who's not interested in wrestling, but you're just interested in personal finance, these videos are for you as well. But what I'm not going to do is what you see on a lot of YouTubers who do personal finance stuff. They're all like these millionaires who tell you about how you can make $1 million and blah, 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 blah. I'm not going to do that because I'm not a millionaire yet. And I'm not going to sit around and try to blow smoke up somebody's ass and be like, well, if you do these 10 steps, you're going to be a millionaire in 10 years. I'm not going to do that. What I'm going to do, though, is talk about my personal journey through finance and how I got out of a very bad mindset about finance and got into a very good one. And that is probably more useful to about 99% of people out here, because I think most of us, especially in North America and especially in the United States, have a very, very poor understanding, and partially due to miseducation, due to other factors too, about finances and how to manage your own personal finances. So before we get into that, if you are interested and you do like this video, definitely hit that like button, pile drive that like button, give a drop kick to that like button down below. Help out the channel, get the algorithm working for me, for YouTube, so other people have an interest in this video can find this video. People who are in the struggle, people who are like wrestling, people who just want to know about personal finance and want another channel to watch, I'm here for you. One of the first things we want to talk about, though, is what is the difference between investing and trading, because again, in the last video I did when I touched on personal finance, I saw a lot of comments from a lot of people and got some emails from people talking about, hey, if I put $5 in this and how much can I do when I sell it? There's a difference between the two. Trading is when you go into the stock market and you just put in money and you hope to get a return on it over a period of time to sell the stock and make a profit. There are day traders too, who are called day traders because they trade stocks every day. So they might buy 1,000 shares in the stock in the morning to sell it later on in the day to make a profit of some money. That is not what I do. I am an investor, not a trader. I'm into investing in stocks and other things, bonds and municipal funds and everything else, in order to build wealth over time, so I don't have to worry about money in the future. I can continue to live my lifestyle. I'm not trying to go out and buy a Lamborghini, as one friend of mine said to me the other day when we were talking about finance. Oh, you're getting all that money together and you're going to be able to buy that Lamborghini. And I was like, I don't want to buy a Lamborghini. I'm building this money and building this wealth so I can live comfortably the way I do and not have to worry about paying the bills in the future, because much like probably most of you watching this, I get a check, I get my paycheck, and I live for a very long time this way. About 2 or 3 weeks later, most of the money that's in that paycheck is probably gone. And I wanted to get out of that rut. So I wanted to establish that first off, because if you're a day trader, I don't know why you're watching this video anyway. But if you're a person who doesn't know much about finance and that's your perception of what investing is, as far as the stock market in particular, probably should get that out of your head, because unless you're very experienced as a day trader, it's not something I would suggest. And it is how you hear all those horror stories about people who thought they could be day traders and they wound up losing a whole crap ton of money. And it can have some very serious consequences too if you don't know what you're doing, like tragically serious consequences. So I'm going to put this out here too. I am not a financial advisor. Most of us on here on YouTube are not financial advisors, and definitely we're not your financial advisor. You haven't paid us to give you information. I'm giving you my story about what I've learned, what I've gone through. But before you invest any money in anything and put $1 into anything, do your research on your own and figure it out for yourself. So how does this compare to the world of pro wrestling? And again, this is wrestling with finance. So there's going to be wrestling references in here, especially for the wrestling fans and people who just know about wrestling to kind of understand how finances work. And one of the things, we can go back to the 80s, a lot of fans know, and most people have heard of Vince McMahon. Vince McMahon is the CEO and owner of World Wrestling Entertainment. Well, back in the 80s, when he first started really taking over the world of wrestling, he bought the company from his dad, and he invested in the company. He was in charge of the WWF. Meanwhile, there was another promotion that was almost as big as he was, called Jim Crockett Promotions, which you may know as JCP or the NWA for a time, and then later on it became WCW. But Jim Crockett Promotions in the 80s, they were making money hand over fist, much like Vince McMahon was with what he was doing in the Northeast, they were doing in the Southeast. And the difference between the two companies comes down to investing, ironically enough. You'll hear this story many times from guys like Ric Flair and other guys that were in the Crockett territory at the time about how they spent money. They bought all of this stuff. They get paid a lot of money at their house shows, and then they spend all this money on jets and on Rolex watches and all of this stuff. And the company spent money, and JCP bought personal private jets to fly everybody around with. Meanwhile, Vince was doing some of that, but a lot of the money that they were getting, especially after WrestleMania 3, which was the one with Andre the Giant and Hulk Hogan that I think everybody in the world knows about, that was a big watershed moment for them, and they made a crap ton of money off of that. But instead of Vince going out like Crockett did and spending all that money and buying, a bunch of stuff that they really didn't need, Vince reinvested that money into the WWF and helped build it in production quality and sponsorships and exposure and everything else, which is why to this day, Vince McMahon is the king of the pro wrestling and sports entertainment world, much to the happiness of about only half of the pro wrestling audience. And right there is a big core of the story I'm going to be telling in these Wrestling with Finance videos. It's the difference between, and that's the best illustration, the difference between what JCP did and getting a bunch of money and spending a bunch of money and going out of business, and what Vince McMahon did, which was making a lot of money, spending some of it, but investing a lot of it into this product so he could grow it in the future, and the long-term benefits of investing over spending or trading. Before we get into any of that though, the rest of this video is going to be really talking about the steps that you need to take to invest. And this is something that the McMahons did, and something a lot of other people in the wrestling business did in order to grow their businesses and to even start out with a good base, a good foundation. And you need a good foundation too, and this is something that I've learned personally. There are a couple of things that you need to do before you invest, and one of the very first things is take stock of your expenses. After you watch this video, you should go, and if you're really serious about this, you should go and sit down and look at your bills for the last month, look at your bank statements, look at whatever you have that that keeps a track of what you are spending, and take an account and make a spreadsheet. Here's how much I spend on rent or mortgage. Here's how much I spend on a car payment and insurance, and how much I spend on food every single month, on groceries, on clothes, on entertainment, subscriptions to Netflix, the WWE Network, all of that kind of stuff, and count all that up, and then see how much, compare that with how much you're making. Now, I can tell you some of you out there are going to do that, and you're going to kind of pull your hair out because you're going to realize that you're spending way more a month than you're actually making. For those of you who aren't, it's probably a good time to look at that point. Well, first off, if you're one of those people that you're spending way more than you're making every single month, you need to do this too. But even if you're not, that's a point where you look at that list of expenditures and go, well, what can I cut out? Do I really need Hulu and Netflix and Disney Plus and HBO Go? If I'm not even really watching anything on Hulu, do I need to be spending the $12.99 a month for Hulu? Do I need to be spending the $12.99 a month for Netflix if there's nothing on that I want to watch? I have a friend I talked to recently about personal finance, and they were going on about how, they were going to wait to do all this other stuff, and they weren't going to invest until they'd done all these things. And then later on, they talked about how they were spending $10 a month on YouTube Music. And me and her daughter were like, why are you spending that on YouTube Music? Do you really need YouTube Music? And yes, I do. And it was like, well, no, you actually don't. You can get free music from a bunch of different places. You don't really need to spend that $10. Plus, that's $120 a year that you could have invested, that if you invested it, you'd still have it plus interest, as opposed to not having it at all and just having some music that you could have gotten free from anywhere else anyway. Things like that, you want to go through and look at that list and see, do I really need any of this stuff? Because a lot of stuff, quite honestly, you're probably not going to need. You're going to want, but you're not going to need. And there's a big difference between want and need. One of those expenses, which is another thing you want to think about when you're doing this, is your credit card and your debt in general. Now, a lot of people have student loans, especially if you're younger in your 20s, you poor millennials have gotten shafted with the student loan debt stuff. Depending on what happens with Biden, President Biden coming, or President-elect Biden, I should say, until later this month, until President-elect Biden really puts into place what they're doing about the student loan debt issue, I would still kind of factor that in, but you may get a reprieve on that. But mainly the credit cards. A lot of people, and myself included, because I did this in the past, spend and carry a huge credit card debt. And that is a terrible, terrible thing to do. Think about it this way, like say on average, like if you're spending, I'm just gonna pull out a number, $300 on credit card debt every single month, then if you're doing that, that's again, money that you're not being able to use to invest and pay yourself. We'll talk about that in a second. You're using that money to pay other corporations. You're basically paying for a CEO's vacation with the interest rates, especially on a lot of those credit cards. So the very first thing you should do after you gather all your expenses together and look at that list is go through, if you have any credit card debt, start paying it down. Every single week, pick out how much money you can take and pay it down. And maybe if you cancel some of those subscription services that you don't necessarily need and take that money for a few months and put it towards paying off that credit card bill, you'll get rid of it. And there's many reasons to do that. Number one, again, like I said, you won't be paying the high interest on it. You'll be able to have more money. It just feels good too when you look at those credit card statements and see that zero balance on there. Now you should always I would use them like once a month for gasoline or buy a pack of gum or something and then pay it off at the end of the month just to keep the account active. But the other benefit of it is it helps improve your credit score, and the higher your credit score is, the more advantages you are. Credit is basically like a permission to be able to do stuff. Like if you have a high credit score, you can do more things than somebody with a low credit score. So you're going to want that high credit score. So pay off those cards, get that debt out of the way, and start paying yourself. Again, stop paying that $300 or whatever it is per month to those CEOs and those corporations and those overcharged high interest credit cards, and start paying it to yourself. And that's a big mindset. The third thing that you need to do is get in the mindset of paying yourself. You pay these bills to Comcast, you pay them to Netflix, you pay them to your car insurance company, you pay them to your rental agency or the bank that you got your mortgage from, but you typically don't pay yourself. Figure out what you need to pay yourself. I would say your check that you get in from your job, no matter how much it is, it could be $800, it could be $80,000 every check you get. 10% of that should be going to you paying yourself. In particular, paying your future self. Because your future self in 5 years, when something bad happens, is going to be very happy the fact that your former self paid you to handle those circumstances. And we all know, because every single one of us goes through crap in life, life will throw you a curveball that can wipe you out if you don't have your finances in order. It happens to a lot of people. It happened to a lot of people this year with the pandemic in 2020. Going in here into 2021, let's try to get that improved a little bit. Once you get to the point of having your credit cards paid down, or even if you can't, because some people have tremendous credit card debt, even if you can just get it under 50%, at the minimum, get your credit card debt down to 50%. I would also, at that point in time, start thinking about getting a high interest savings account. Now, there are some I can suggest to you. There is a hack I'm going to tell you about in a little bit, but one of the things you want to do is you want to go on Google and you want to look up and search high interest savings accounts, because there's a bunch of different ones. The rates change all the time. So by the time you watch this video, I don't know when you're going to watch this video, but I can't suggest to you companies right now. You should probably, again, do your research. Find out what those companies are, who's giving you the best APY, the best return on your money. And that way you get the compound interest and you're able to start growing money and get that emergency savings account. And the reason why I call it an emergency savings account is because that's going to be money that in case crap happens, you'll be able to go back and rely on that. Again, that's something, if to tie it back to pro wrestling, that Jim Crockett Promotions didn't have. So when they had an emergency, in the case of when Vince McMahon kind of screwed them out of Starrcade 87 by putting the Survivor Series pay-per-view on at the same time, they lost a lot of money on Starrcade. They went out of business less than a year after that event. So that is a reason for you definitely to get that emergency fund. So what should be in the emergency fund? You should probably have about, they always say about 3 to 6 months of your living expenses. So again, go back to that list of how much you spend a month, how much you need to pay a month in order for you to live, and multiply that by 3 or 6, and that's how much money you should have in these emergency savings accounts. And you can get one from, I mean, Ally Bank is a very popular one. American Express is a very good one if you want to look into those. Now, there is a hack that I did find. There's a company called Netspend that has this debit card that pays you 5% compound interest. Up to $1,000, you don't have to pay a fee on that card. And the hack is that you can get one card, have it reach that $1,000 limit, but then you can get 3 more cards. So across those, you would have $4,000. All of that gaining 5% interest, which is about $50 a year, and then you're going to compound it over time, obviously. Now, if you do something like that, again, that's a hack. That's a little bit of advanced level financial hackery there, but you get the point. Even if you don't do something like that, just get a good chunk of money in a high interest savings account. You don't want that money in your checking account, because if you look at your checking account, what the return is usually like 0.0001% or some crap like that. So you're getting like half a penny every single month on the same amount of money. You want a higher interest rate, which these days, a 0.5 interest rate is about okay. Some are 0.3%. Some of them are up to 2%. And like I said, the Netspend one is around 5% as of this recording. So you want to check those out and just look for deals and look for any cards that are going to do it. Your credit cards too, you're also going to want to start taking advantage of some of those cash back options and use the cash back stuff to spend on things to save yourself money in the future. All of this really starting out is about putting more money in your pocket and less money in the pocket of other people. After you get kind of familiar with doing that and get in the habit of paying yourself every month, whether it's going to pay down the credit card debt or going into your emergency fund, at that point I'd start looking into investments and start researching what Robinhood is, what Webull is, what money market accounts are, what bonds are. Some of you might even want to go into real estate. So there are a lot of different options in the future, and we're going to be talking about that on this channel in future videos for Wrestling with Finance. But for right now, for those of you, and I know a lot of you, because again, I've gotten a lot of messages from you guys and comments for you guys starting out. That's what I've talked about in this video is really where you want to start at, which is getting all of that debt out of the way and getting some money, a nest egg saved away, and then you can start investing. But we will talk about that in future videos. None of this, again, is guaranteed. I am not a financial advisor. I'm a guy on YouTube who's telling you about his experiences and how I got myself out of doing crap, because I used to do a lot of stupid stuff. I used to run up credit card bills and spend, I got a lot of money and I spent a lot of money and didn't save up a lot. And now, in the past 5 to 10 years, I've saved up a lot of money. I've invested a lot of money, and I can tell you right now, just from my personal experience, it's a lot more. I'm a lot more comfortable now in life than I was before, when I was just spending money and then I have to make more. I have to make another $10,000 this month just to maintain my lifestyle. I don't have to do that anymore, and that is a very freeing and liberating thing, because it allows you to do a lot more in life. And that's really, at the end of the day, what this is all really about. It's not really about trying to get rich. It's trying to get to a point where you can live your life comfortably without having these dark clouds of debt and finances and all this other stuff hanging over top of you and stressing about money all the time. It'll help your self-esteem, it'll help your health, and it'll help your relationships as well. But again, until then, if you like this video, definitely drop kick that like button down below and leave a comment. Let me know what you guys think about personal finance. Where are you guys at? What would you like me to cover in this series? Is there anything that particular that you want to know about? But I can tell you that this is the kind of strategy that, since people like Vince McMahon and Warren Buffett and other people have used in order to have wealth instead of just having money, because there's a difference between the two. Now, as far as free stuff is concerned, maybe say you want to cancel your Netflix account. Well, what do I do now? Well, maybe spend the next month listening to audiobooks if you really like audiobooks, or if you want to get Obama's new book, or you want to Jordan Peterson's new book or the Young Bucks' new book on killing the business in pro wrestling, there is an Audible link down below for a free 30-day trial of Audible. You can click that Amazon link and get that down below. Also, I've got some free stuff for you guys, for those of you who are ready to dip your toe into investing, or at least you just want to get some free stocks. There is a link down below for Robinhood, which you get one free stock by using that link. Also, you can get the Webull account, which a Webull account will give you 2 free stocks. And if you fund that account up to $100, then you will have another 2 free stocks. So that will be 5 free stocks that you get, which is essentially me giving you a bunch of free money, because those stocks could be worth anywhere from $5 up to $1,200. So you can thank me later. But anyway, that's it for this video. In the next video, we are going to be talking about some of these investment strategies, the different kind of investments that you can do. So stay tuned for that video coming up soon. Thank you guys for checking this out. And hopefully we will continue to do these videos here with Wrestling for Finance on the Rantin Review. Have a good day.